Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up. And this wrap-up is for Wednesday, the 22nd of February, 2022. All right, my friends, we saw the Fed minutes. So let me just give you the gist of this. For those of you that get my full research where I write my twice daily reports, I've done a whole analysis. I'll sum it up for you. I'm in the camp now where we're going to see the Fed keep going 25, 25, 25 indefinitely until the economic data weakens enough where the Fed thinks that a weakness is embedded, locked in, where it doesn't have to do it and the market goes on its own. I do not think the Fed wants to be in the camp of going 50 basis points to tip the market over the side. From what I read, it appears that the market is hoping, fingers crossed, that there's a lag effect that will hit the market in different sectors and it'll work on things. Time is on their side, in their opinion, as long as the inflation number goes. Nobody is saying that it has to end next Thursday at noon. I'm being facetious, obviously. Nobody is saying that inflation has to end by September so that they can pivot down. As long as the labor market is strong, it's very clear from the notes, the Fed has time on its side. What it won't do is it won't allow them the opportunity to not keep rates going higher until that inflation numbers in all the sectors is weakening enough to take the market down. The stubborn sector is service, and my dilemma with service is we're going very shortly into spring, summer months. Labor in the service sector, the building trade, just think of everything that's outdoor. If there's anything, it picks up the demand for it. So I don't see that weakening dramatically. And for me, that's a bit problematic, but not problematic enough to think 50 basis point hikes. There's always, if you have 19 people that make up a Fed, there's always going to be a certain element here that wants to go and get it done quicker. There's going to be those over here that say it's taking care of itself. We don't have to do anything. We had none of those people that didn't want to do a 25-point hike. And from what I'm reading, they'll all be behind another 25 for the March hike, and we'll see what goes after that. Everything's data dependent, and the data does not warrant the Fed not raising interest rates. But in reading everything, I'm getting the impression they don't want to go and get it done quicker. They believe, as a group, that the lag effect is gradually taking hold and it will carry the market down and they don't have to tip the ship over. That's what I'm saying. When I look at SPY, it's still a bearish trend. You can see how the market is coming down right here. You have a pattern of a higher high, lower low. This has been a vertical decline. That's what that's called, by the way. It's a decline where the market each day doesn't take out a prior day's high. So the high was made here, and then day 1, 2, 3, 4, 5 days in a row so far, you haven't taken out a prior day's high. That's the vertical price decline. It could carry the market down into the area of 393.18, which is the 200-day average, to the green line, which is the 100-day. The Bollinger Band is the more likely target, and you hit it today. Got it? You hit it yesterday and today, and the market's trying to hold that. That does not mean it holds it and it whips itself back up. That's not what I'm saying at all. If anything, I look here to see where we're at. We're in an oversold condition. Oversold conditions resolve themselves in one of two ways. Either the market does give you a rally, and if it rallies, could go back to the 18-day average to fight the battle, and in the process, get rid of that. Or the blue line starts racing after the red, both go underneath a 20 level and start going sideways, which would be a very bearish situation. Right now, it appears more like you're oversold. The market might want to give you a little bit of a bounce, but not a bullish trade. Just a market where the pros, I think, are saying, we hit the Bollinger Band, only 5% of the time do you stay under it. I'll take money off the table. In UGA, I want to see how the market now does at the lower band. This is the type of action I expect to see right now all the way through until we get into the spring. This is not spring. This is February 23rd. I did this report because I'm preparing you for the spring and summer months and wanted to get your attention there. Would I be a buyer in the month of February in the middle of one of the storms that's going across the United States right now? from California, where they might get snow in Los Angeles County. I don't know if you heard that tonight. We have trees down in the Chicago area. It's going right up all the way out east. A major, major event. Planes, thousands being canceled right now as we're talking in the United States. Trucks off the road, crashing. They're telling them don't drive. Ice storm of major ramification. But it's February 23rd. Next week, at least in Chicago, 50 degrees again. We're not getting snow here. We're getting a rain event. We just happen to be in the warm area temporarily, but it's going to get slippery as temperatures are dropping. In Apple, you're down to the first support. Again, the second actually. The first is the 18-day average. The second is the 200. If that lets go, you open the door up to get back to 143.24 to 142.77. And no, you're not trending. You have a higher high and a lower low pattern. I want to stop here for a minute. You know, I told you I did a special report, and I did it, as you know, on Walmart. Well, what I didn't realize is that a lot of you that went into the report, you went in and you couldn't see the report. We had tested it for the people, and we made a mistake. First, I haven't done a stock report in over a year and a half or so. Maybe I don't remember doing one earlier. And we tested everything, and we missed something. It's that simple. Human error. My IT department missed something, and new people into the site couldn't see it. Go back, take a look. The report will play for you this time. So you go to our website under the word research, you'll see it. It's all there. This report ends this week. I put my reports up for 3 business days. So you want to take a look. You can also see it by coming up here. We did price counts, no seasonal charts. We'll take that off. I don't do seasonals on stock charts. I haven't found a seasonal that works. I'm sure they must be out there. If you know a service, let me know. I'd look at it. But I'll be doing all these different types. And yes, come the earnings season, I'm going to bury you in them because we're going to do a lot of them for you. I'm also, as you know, going to be doing soon another webinar next week. And tomorrow I'll be with my IT people and we'll decide the date of it. Regardless, up here, you can move your cursor. If you go to the website, it's under the word research. You'll see it, give it a click, and away you go. All right? Okay, let's come back over here if we could. So, AMC, wow, what a ride this is getting. This is acting again like the meme people are there. You're going from the upper band to the lower band to the upper band. Not a lot of information to trade off of, just moving back and forth in waves. I guess if you know how to pick a top and pick a bottom, you did great. If you picked the bottom to go back up, you did. I don't know how to do that. I'm sure there's somebody out there that does, but trend traders aren't doing that, I can tell you that much. In XLF, you're bearish, you're oversold. The market is attacking the lower Bollinger Band. It's rare that it stays under it more than 5% of the time. You've opened the door up for a test down here, but it'll be hard to get there, 1, 2, 3. XLI has gone really from the upper Bollinger Band to the lower band, done it in about a 2-week period, if you think about it, the beginning of February, 3-week period. Here we are at the 22nd. That's really what it's done. Not really trend trading in any manner. You have a higher high, lower low, caught in the waves there. Nothing to do. I'm not liking what I've seen in stocks. Now, you are seeing some of the companies like NVIDIA came out today. Stellar, look pretty darn good. Intel, a nightmare, as you know what we've seen. But you're into a zone of short covering. You're already oversold. You're at the lower band. What are you holding on for? It's probably a good spot that traders are going to cover. In the home builders, well, this couldn't help. I mean, as I read it, you know, interest rates are probably back up to 7% or so on the 30-year mortgages. People are going to go for the short ones. That's where they're going to go. They're not going to go for a 30-year. You take and you refinance. That's how you buy homes in this kind of market. And as we've seen, when we look at existing home sales, they're a disaster. So people are just saying, let's forget it. We're in February. I got time. The kids and I will look at whatever we're going to do come spring. We'll see where rates are at that point in time. And it's not the market where people are chasing houses anymore. In fact, if anything, there was a story on the national news tonight. I was watching, I think it was NBC, a buyer's remorse of people that have chased homes and now they've fallen in value and they're backwards in their homes. I've seen this. Okay, I'm old enough where I've seen this all happen. You have to know when to not buy something. Sometimes it doesn't matter if you're backwards. You needed a home, you got your family in it. It's like the stock market. It corrects, but I don't know in most areas where homes don't go through a cycle and then come back up and try to go for new highs. At least I've been fortunate enough to live in areas that have done that. In XLE, we're still in trouble. If interest rates are going higher in the U.S., they're going higher abroad. People follow what the U.S. is doing. Therefore, that weighs on this market because you're taking money out. You're taxing everything by creating higher interest rates. And that's what's putting this down at that point in time. Gold, the enemy for gold and silver is a higher U.S. dollar. Well, if we're raising interest rates, it's hard to tell me the dollar is going to drop when you got a service sector, employment that's as strong as we are, and the economy is strong. Yeah, there are sectors that are weak. We can go back to housing. We can go back to parts of retailing. But we can also go to parts of retailing like LVMH that is super strong, right? So there's a little bit of everything. I think that the gold has to fight the headwind of the dollar. And why do I want to own gold when I can get 5% for 6-month T-bill? Tell me why I want to own gold. That doesn't make any sense at all. I can be where inflation's at. If this is an inflation hedge, what's a T-bill? I have zero risk, and I'm going to be right where inflation basically is. That's what's gold's problem. Silver, same issue, all right? Got a problem there. But silver and copper can come alive because of China. And when you go to copper, that's going to be the key. Now, COPX looks nothing like the copper futures, which are in an uptrend, and this is in no trend at all. So, going to have to wait for the two to come together, and they do. As for TLT, as I said, I want no part of this at this point in time. It is oversold or not. It's not oversold. It's locked into a bear trend. It's called embedded. The pros are going to be selling this market on good rallies. I hate selling the first challenge under a 100-week average, but because I think interest rates are going to keep going up, yes, I do. I think there's 3 rate hikes right in front of us at 25 basis points. Probably going to have a hard time staying over that number. As for the dollar, wouldn't be surprised over time if we get up here. You have a bullish embedded reading as well. And an FXE, I'm still in the bear camp to a degree, but Ms. Lagarde has to go strong. Mr. Villeroy came out today from France going, well, it's not baked in. Doesn't mean that we have to go higher. Wrong. If we're going up, you're going up. It's really that simple. Okay, I don't know how else to say it, but we're the leader of this parade. So you put it all together, you come up with a game plan, and mine for you is pretty simple. Take a look at my special report. Remember, you can click up here at any time or go to our website under research at iraepstein.com, and I'll see you tomorrow. Take care.